Hey everybody, it's Janelle Stowers with Realty Central Education Center. So it has been a while since we have dropped the video. The summer has been super busy. We've been killing real estate transactions, but we still want to make sure you pass that real estate exam. So today we'll just drop a few financial terms, terms that lenders may use, terms that you may see on the real estate exam. We just want to make sure that you are well versed with those. So let's start with a few acronyms today. The first acronym that we'll start with is PITI. So you may hear lenders use the term PITI. PITI are the items that are included inside of a purchaser's mortgage. So when we say PITI, we're talking about principal, interest, taxes, and insurance. Those are 4 items that will be included in a purchaser's mortgage. So make sure that as the real estate agent, you're versed in what those are, but especially on that real estate exam when you are trying to get that real estate license. So again, we're talking about PITI, that is principal, interest, taxes, and insurance. Another term or acronym that you may see on your real estate exam is PMI. PMI stands for Private Mortgage Insurance. This is insurance that the lender may attach to the mortgage to ensure that the lender is protected just in case that buyer defaults. So if we had to think about the PMI being additional, you would think of it as PITI plus PMI. So you would have principal, interest, taxes, insurance, and the additional mortgage insurance added to a buyer's mortgage. And then we can go extensively in terms of maybe we have a property that's sitting in a flood zone. And so the lender would require flood insurance to be added to the mortgage. So then we would have principal, interest, taxes, insurance, mortgage insurance plus flood insurance. So as a real estate professional, you would have to explain that each one of those items attached to the mortgage would of course make that mortgage payment go up for the buyer. So again, today we're just looking at some financial terms, some acronyms that you might see on that real estate exam, and we want to make sure that you're prepared. And then lastly, you might see what we call LTV. LTV is the loan to value. Most of the time we're dealing with that at the very beginning of a transaction, because once our purchasers are approved, they'll probably come to you with this pre-approval letter and you'll have to identify what their LTV is, or what the loan to value is. So loan to value is simply what the lender is giving based on the value of the property. So if your LTV is 95%, it means that the lender is issuing a 95% loan versus the price of the property, okay? So if you have a $100,000 property and you have a 95% LTV, it means the lender's gonna give you $95,000 to purchase that house, and then the buyer would be responsible for $5,000. So LTVs could vary depending on the loan type, but just remember, LTV means loan to value. So if we have to sum up today's financial terms, we've talked about PITI, which is principal, interest, taxes, and insurance. We've talked about PMI, which is private mortgage insurance, and that's beneficial for the lender. And then lastly, we've talked about LTV, which means loan to value. So pop those terms into your memory and make sure when you get to that real estate exam, you know what you know. So thanks for tuning in. Can't wait to drop that next video.